Thank you, sir. Thank you.
I have reminded Debashish Mitra and he will join us by 7:30 is his session, no?
Okay, sir. Okay, sir. Thank you.
7:30, isn't it?
Yes, sir. Yes, sir. 7:30, sir.
Thank you.
Good evening. My topic is on GST. My topic is on GST, input tax credit. Very important topic and very easiest to remember every points. Now we are going to discuss the eligibilities and conditions, time limit, apportionment of credit, locked credits, and special circumstances for availability of credit, and how to utilize, what order to be utilize the input tax credit. So first let us come to understand what is the meaning of input tax. Simple. If anything we purchased from the supplier, we will pay the amount along with the tax. That tax component is called
Speaker sir, 1 minute. I think lot of disturbance is going on. Some people are speaking. Lot of disturbance is going on.
Okay, sir.
Lot of disturbance is going on. Kindly. இல்ல யாரோ வந்து அங்க சுத்தி பேசிட்டு இருக்காங்க.
Sir, we'll just mute all, sir. 1 minute. Actually, எல்லாரும் mute தான் ஆயிருக்கு.
Sir, speaker மட்டும் unmute பண்ணிக்க சொல்லுங்க sir.
Yes.
Okay.
Component also. Such tax component is called input tax. Input, come to understand what is the meaning of input tax. Simple words, if whatever things we buy, we will pay a tax component also. Such tax component is called input tax. Input tax means the recipient pays the tax component to the supplier, otherwise to the supplier or the government. It can be under the forward charge or under the reverse charge, but does not include the composition levy. In this input tax credit, there are three vital sections are talking about. Section 16, 17 and 18. Section 16 deals about the eligibility, conditions and time limit for availability of input tax credit, and finally it restricts whenever we take the depreciation component on the input in the component of the tax component. Okay, section 16 eligibilities, conditions, time limit and no ITC if depreciation is claimed on the tax component. We can go one by one. Section 16 subsection 1 deals with simply 2 points. Every registered person is eligible to take credit, and that goods or services must be utilized for the purpose of business. Then what are the conditions? There are 4 conditions. The recipient must receive the document. It can be in tax invoice, debit note or any document evidence for such purchase, and goods or services must be received by such recipient. There are 2 exceptions we can deal lastly. Then such recipient should be filed written under section 39, and the supplier for such recipient should be paid tax to the respective government. He can pay by utilizing the electronic credit or by cash. These 4 conditions should be satisfied under section 16. So now can we deal about the exceptions here? Receipt of goods. This condition need not to be fulfilled if such goods does not received by the recipient under the 2 situation. 1, bill to ship to model. I am going to tell about it. And if whenever job worker received such goods, in that time also no need to receipt of goods or services. Then finally there are 1 more conditions also, payment of tax within 180 days. Here also some exceptions. This is not applicable, this 180 days to be compulsorily paid tax, that is for the RCM supply as per the schedule 1, and additions made to the value, taxable value, that ad valorem value under section 15, right? In these 3 situations, no need to payment of tax within 180 days. So bill to ship to model. Let me come to explain this. If I am a recipient in Chennai and my customers in Delhi, I need to ship the goods from my supplier in Kolkata. So no need of getting from my supplier and give it to the customer. Instead of that, I insert the supplier Y in Kolkata to give it to my customer X. In this case, I, as a recipient, eligible to take input tax credit. Now I bills to Y and Y ships to X. This system is called bill to ship to model. Section 16 subsection 3 tells that no ITC will be allowed if a registered person who claimed depreciation on the tax component of cost of capital goods and plant and machinery. Here are two situations arises here. One, if the depreciation charged on the tax component along with the tax component, that is first case in left side, 100 rupees cost of goods, tax is 18%, so the value I paid for the purchase of such goods or services is 108. I charged the depreciation on 108 rupees, then my depreciation is 10.8. In this case, I am not eligible to take credit because the section 16 says. In another situation, if the depreciation I charge it on the cost and not on the value of 108, means my depreciation value is 10 rupees, not 10.8. Here I am eligible to take ITC. Now, time limit. Finally, in the section 16 deals about the time limit. Within what time I need to take the credit? We have to take the credit due date of filing the return for the month of September, that is section 39 deals about that return should be filed. That return must be filed in every month 20th date. In that September means next October 20th is the last date. Or actually when I am filing the annual return, whichever is earlier, this is the time limit. And one exception is there, very vital thing. This section 16 subsection 4 does not apply to claim for re-availing of credit that has been reversed earlier. We are going to discuss in this in section 18 subsection 2. Very important thing. That time we will understand completely. Now just of all remember, for re-availment of credit does not apply this time limit. Except this, for everything time limit is there. This or this, whichever is earlier. Next, let us come to understand the section 16 with the help of the interesting example. Mr. Bean purchased the goods or services from Chota Bean for rupees 10,000. Here, who is a recipient and who is a purchaser? Here, purchaser is a recipient is a Mr. Bean and the supplier is a Chota Bean. Now 10,000 value purchase. Mr. Bean is a registered person. First point. Next, he purchased goods and used for the course or furtherance of the business. Number 3, charged GST 18%. That is CGST, STST. Intrastate supply, I think so. So 900, 1,800. And Mr. Bean received the goods or services and along with the invoice. Next, now Chota Bean paid the tax to the government because he is a supplier, right? He collected the tax from the bean and paid it to the government within the due date. Now he is eligible to take ITC 1,800 rupees. We can understand by this diagram. He is eligible to take ITC because he fulfilled every conditions eligibility in section 16 of CGST Act. Here is another summary of full ITC. Eligibility: supplies must be used for course of furtherance of business, received the tax invoice, recipient of supplies, and tax to be actually paid to the government and must furnish the return under section 39. In next section, section 17, we are going to deal whatever goods I purchase, it must be used either for business purpose or non-business purpose. Exempted supply, taxable supply. In that whole ITC, I cannot be claimed. We need to apportionment of credit, whatever to the what and all the credit applicable to the business purpose, only applicable to avail. And next, what and all the taxable supplies I made, in that only I can, including zero rated supply also I am eligible to take ITC. Balance I need to apportion that. That is one big formula is there under the section 17. we are going to deal. Here non-eligibility simply ulta of this eligibility. If he not paid 180 days within tax not paid within 180 days, already we discussed it. Claimed depreciation on the tax component, does not file the return under section 39, or does not take the credit within the due date, and ineligibility of supply section 17 subsection 5, very interesting topic. Blocked credits, certain credits are blocked. Here they straight away told these certain supplies are completely blocked, we cannot take credit on these items. Next special circumstance in section 18 is deal that in that now till now I am not a registered person, now I got registered, how I need to take the credit, or ulta case. Two circumstances are there, we are going to discuss in that. Now section 17 apportionment of credit. I told that I purchased goods and used for both partly for business purpose and partly for non-business purpose, and zero rate making the taxable supply and exempted supply. In that only ITC available for business purpose and taxable supply including zero rated supply. Here exempted supply is not every exempted supply. Exempted supply has one formula to arrive at. Exempt supply include all RCM supply and transactions in securities and excludes the schedule 3. But in that schedule 3 one is exception, we can include it. What means sale of land and sale of building when entire consideration is received post completion certificate or first occupation, whichever is earlier. Same this formula will be utilized everywhere wherever we need to compute the exempt supply. Here one more case, special provisions for the banking companies and NBFCs. There are two options given to them. Either first option to avail the proportionate ITC or avail 50% of eligible ITC. Remaining 50% can be lapsed. This is either option to them only, not a compulsion. Next, apportionment of common credit in case of input and input services. I already told only for if I used for both business purpose and non-business purpose, or both exempt supply and taxable supply, I need to bifurcate it and take only that eligible ITC. Ineligible ITC should be removed. And blocked credits we are going to discuss 17 subsection 5 deals it. So first of all we have to segregate these three: non-business purpose, exempt supply and blocked credits. After that it is termed at C1. From the C1 it is again bifurcated that every zero rated supply alone we are taking, that is eligible. Balance common credit is there. In that common credit it consists of two: one eligible ITC and ineligible ITC. Ineligible ITC to be removed and eligible ITC will be taken. What is that ineligible ITC? Nothing but exempt supply and non-business purpose. First D2 tells about the non-business purpose. Non-business purpose they are assuming 5% of C2. C2 we told right, common credit, in that 5% we have to be removed because that is ineligible. And D1 tells about the exempt supply. They are taking the past financial year values of the exempt supply and total turnover, that proportion they segregating and taking as ineligible credit. So from D1 and D2 we are segregating ineligible credit. Balance is remaining common credit which is eligible to take the ITC. So total eligible ITC will be T4. T4 means we saw right here zero rated supply, and balance, that is C2, we are removing the D1 and D2. Balance C3 is eligible credit. Now same input and input tax. Here common credit on capital goods. First of all, what is meaning of capital goods? Simply whatever we capitalize in the books of account are called capital goods as per the section 219 subsection 19. Same formula we are used here. Non-business and exempt supply will never be credited in electronic credit ledger, but whenever I used the capital goods for the purpose of taxable including zero rated will be credited in electronic credit ledger. There are three ledgers are there. In that one is electronic credit ledger. Automatically electronic credits will be updated along with the provisions of the section 16, 17 and 18 of CGST Act. This is somewhat complicated. We have to think and analyze it. They gave the formula as 60 months. We divide it fully by 60 months the value, and we have to take the credit per month, per year, 12 per year. 5 years we have to segregate it. Per year 12 months is that, so 60 months we are dividing the total credit and we have to take it year wise. All the credits are eligible to take credit? No, because there is a blocked credit under section 17 subsection 5 that restricts the ITC. So motor vehicles, these are the standard, we have to remember it. This simply we have to by heart it. 14 things are blocked. Such transactions cannot be taken into credit. Motor vehicles for the transportation of persons having seating capacity not more than 30, and vessels and aircraft. This motor vehicle, vessels and aircraft, 3 we have to remember it. Everything is not blocked, only this is blocked, but except when such motor vehicle or vessels and aircraft is used for the business or used for the purpose of transporting their own passengers, or when such is purchased for using in the driving school itself. These 3 are exception. These eligible for credit, balance everything is blocked. And general insurance service, servicing, repairs and maintenance, so far related to this motor vehicle and vessels and aircraft. Then supply of goods or services of foods and beverages, outdoor catering, beauty treatment, health treatment, cosmetics and plastic surgery, leasing, renting or hiring of motor vehicles, vessels and aircraft noted in 1 and 2 above. Same motor vehicle and vessels and aircraft, whichever is ineligible will never be taken, because there is 3 exception we need to watch clearly. For the 4th point, IT shall be available when it is obtained for the employee, provided to the same to its employee under any law, that is statutory. Membership of a club, health and fitness center. Travel benefit extended to the employee on vacation such as leave or a home travel concession. Immovable property other than plant and machinery. For the plant and machinery it is eligible. Other than plant and machinery ineligible. And work contract service for construction. We will be dealing back. I will explain the exceptions apply. Then received by a taxable persons for construction. Goods were services used under the section 10. Section 10 talks about composition levy, and goods received by the non-resident taxable person, and when the goods and services used for the personal service, and when goods are lost, stolen, destroyed, written off or given as a free sample will never be eligible for credit, and any tax paid under section 74, 129 and 130 never be eligible to take credit, and exception applied to the above. Here are the exceptions can be understand very clearly. Ineligible motor vehicle is nothing but less than seating capacity less than 13 members including a driver. What are the exceptions? We already said, if it is used for the purpose of business, when it is carrying the passengers, and when it is used for the driving school. Same exception is applicable for vessels and aircraft. Driving school alone taken, and we have to understand it. Navigation, flight, training for their customers. Then general insurance service, repairs, maintaining, here exceptions are there. What the exception means, same that motor vehicle, vessels and aircraft, for that any general insurance, servicing, repairs and maintenance will never be eligible for credit. We can be taken for credit, except that everything is ineligible, blocked. And leasing, renting, hiring of motor vehicle, vessels or aircraft which ITC is disallowed. What and all disallowed alone will be blocked. Here the exception is that when such service, leasing, hiring, renting of motor vehicle, vessels or aircraft provided to the employees by the employer under the statutory obligation will be exempted and applicable for credit. Same food, beverage, outdoor catering also same exception is there. And subcontracting, this too will be repeated for every blocked credit. Subcontracting is nothing but I purchased and leased for someone else. I beauty treatment, health service, I just subcontracting to someone else will be blocked. So credit will be available for the above exceptions. Here also membership of a club and health and fitness center, benefits to the employee on vacation, and any income supply received by the non-resident taxable person. And here one exception is there, goods imported by him. and tax paid in 1774, 124 and 130 section will never be eligible for credit. And blocked credits part B says that five things: work contract service on immovable property, inward supply on the any construction service imported. These two are blocked, but for the both having same exception when work contract service is utilized for plant and machinery or availed for subcontracting it, or whenever the work contract service is not capitalized in the book, that will be revenue-wise will be eligible to take credit, otherwise ineligible. Same any construction service of immovable property, very important thing is immovable property, but that immovable property is a plant and machinery means that is eligible, or we constructed for subcontracting is eligible, and constructed for construction had not been capitalized is eligible. Same way any composition levy section 10 inward supply will is blocked, and goods lost, stolen, destroyed, written off or disposed of by way of gift or free sample is blocked, and inward supply used for personal consumption is blocked. This is just a key. Then example, let us see an example to understand it. KCP Private Limited is a registered person is engaged in manufacture of taxable goods. The company provides the following information pertaining to the purchase made and services availed by it during the month of July. Let us see the examples. Raw materials to be received in the month of September. Okay, to be received in month of September. Now July, August, September. Here section 16 subsection 2 does not applicable. Goods does not receive. So this is ineligible. Then membership of a club availed by the employee working in a factory. This also blocked under section 17 subsection 5. And input to be received in five lots out of 3 lots was received during the month. So this also one important provisions I missed out. For the last lot, whichever goods receiving in the lot, it can be eligible to take credit only at the time of last lot is received. Here 5 lot out of 3 lot is received. It is eligible only at the time of receiving the last 5th lot. Till now it is not eligible. Truck used for transport of raw material, it is eligible because truck used for raw materials does not block, only blocked for the purpose of passenger seating capacity less than 13. Next, capital goods out of 3 items, invoice for the 2 items was missing. So this also blocked the case because in section 17 subsection 5 this items whenever missing, this is blocked and never eligible to take ITC on credit. And GST paid for the 2 items is 80,000 means we have to reduce 1,50,000 minus 80, balance 70 is eligible. Therefore we come to conclusion nil and last 2 alone 40,000 and 70,000 is eligible to take credit. 1,10,000 that KCP Private Limited is eligible to take credit for the month of July. Now finally last section 18 deals about 2 circumstances. One is special circumstance enabling for availing credit, and one more is leading to reversal of credit. These are 2 extremes. Till now I am not a registered person and a regular scheme. Till now I am a registered person under the composition levy. Now I turn into a regular scheme means such is a first circumstance. First A category, first one. Next, a registered person till now exempt supply, now becoming taxable. Third, persons availing registration within 30 days becoming liable for registration. Here, till now I am not a registered person. Now I am my turnover got existed as per the section 22, 23, 24. Want to get registered mandatorily within 30 days from the date of becoming liable to get registered. So in that case, and lastly, voluntary registration. Any person voluntarily get registered. These 4 cases are dealing in the A circumstance, the special circumstance enabling for availing credit. And second circumstance, this ulta case, registered person switching from regular scheme to composition, that is section 10. Now from a regular scheme he got converted into a composition levy. Or second, till now he is supplying taxable, now become wholly exempted tax. And third, cancellation of registration. They're availing for registration, their cancellation of registration, and lastly, supply. If he purchased goods, capital goods and or plant and machinery, and he supplied such capital goods or plant and machinery, at that time ITC has been taken, we need to reverse it. We can discuss one by one. Special circumstance for availing of credit. That first four cases, now I am switching to a regular scheme or becoming taxable supply. We know that till exempt, wholly exempted supplier need not to be get registered. Whenever I supply a taxable goods, I need to get registered as per my turnover based on the respective states. In these two cases, we have to in this case, we have to discuss two things. One, what and all need to be get credited. Two, how much need to be get credited. That last two cases are there. Persons availing for registration within 30 days from becoming liable and voluntary registration. First, we completed this two. What and all can be get credited? All inputs in the stock, semi-finished stock, all finished goods held in stock. Okay, what and all want to be credited, we understood. When we have to get credited on the day immediately preceding the date, becoming liable to pay tax or get registered. Credit now we can come across the two cases, switching from composition levy to regular scheme and become exempt supply to taxable supply. Same thing, input on stock, semi-finished and fully finished stocks held in stock will be eligible to credit. And here one important thing is for capital goods. Already we saw capital goods is divided and useful life is 5 years, that is 60 months. Here I will give an example. We have to reduce 5% per quarter or part thereof. Meaning, for example, January 1, 2020, if you purchased any goods, capital goods for worthing 10,000 rupees, in that GST 18% means we will pay 1,800 rupees as a GST to the supplier. And now January 1, 2022 means 2 years lapsed. From that time, I am not a registered person, so there is no eligible to take credit. Now I become in this either converting from composition levy to regular scheme or registered person supplying wholly exempt, now taxable supply. Now I am eligible to register and get eligible to get tax credit means now 2 years is lapsed. Per year 4 quarters, 2 years 8 quarters. 8 quarters means 40% will be reduced. Balance 60% is eligible to take credit. This is explained. This is 5% of per quarter apart thereof. Here also, what and all want to be take credited is understood. When to be take credited? On the day immediately preceding the date liable to become registration or become taxable goods, supply of taxable goods, or converting from regular composition scheme to regular scheme. This circumstance B, same thing, reverse. We have to take reversal. What and all we took credited in the previous section, we need to reverse it. Opposite case, same thing, what and all we took credited, we need to reverse it. Same, that input held in stock, semi-finished and fully finished stock and capital goods on the day immediately preceding the date, cancellation of registration. Okay, here inputs means in the proportion of reversal based on the corresponding invoices. If such invoices are not there, we can take at the market price, prevailing market price on the effective date, switch over the cancellation or exception or exception. Cancellation of registration should be used on the due date of certificate. Then capital goods, same provision, we have to remaining what and all pro rata basis, we need to reverse it. Here lastly, when I supply the capital goods or plant and machinery, such ITC must be got reversed it. Now some examples we can see. A, B, a registered person. This example is regarding section 18. A, B, a registered person, was supplying tax under composition levy up to 30th July. However, with effect from 31st July, A, B becomes liable to pay tax under regular scheme. Is A, B eligible for any ITC? Yes. As per the section 18 is insisted, till now I am a composition dealer, converting to regular scheme must eligible to take the credit. So AB is eligible for ITC on input held in stock, input held in semi-finished or finished goods held in stock and capital goods as on 30th July. ITC as on 30th July is very important because on the day immediately preceding the date of becoming normal regular scheme. And ITC and capital goods also eligible to take, right? So will be reduced by 5% per quarter or part thereof, as we said the January 1 2020 I purchased and now converted on January 1 2022, 2 years, that is 8 quarters. That means 40% of the value of tax I paid is not eligible. Balance 60% is eligible. Next example, Mamta Trade links trades in exempt goods and provides taxable services. It is registered under GST. On 1st October, exception available on such goods get withdrawn. Here, till now he supplies exempt supply. Now such exemption is withdrawn means taxable. Same determine the eligibility of Mamta trade links for availing ITC. If any on input capital goods used, here capital goods also eligible, and inputs on finished goods, semi-finished goods, and held in stock also eligible. So in this case, the solution is if the exempt supply made by the registered person becomes taxable, provision 18 subsection 1 clause D applicable. In the given case, since Mamta links the registration, section 18 1D will be applicable for both stock held as finished or semi-finished goods and capital goods. That capital goods we have to be reduced 5% per quarter or part thereof from the date of invoice. Now, finally, how to utilize the electronic credit ledger. There is some provisions regarding this. IGST credit can be utilized for IGST and CGST or SGST in any order or in any proportion. Previously, CGST, SGST order was there. Now it is not there. In any proportion, such IGST credit can be utilized. Then IGST credit, ITC of CGST credit can be utilized. ITC of CGST credit can be utilized by CGST and IGST. First CGST and then only IGST. Next, ITC of SGST can be utilized for SGST and IGST. Here, one important provision is here. Only when ITC of CGST is nil. Whenever CGST credit is nil, CGST is become zero, only then we can utilize such SGST to the IGST. Next, ITC of CGST is never be eligible to set off the SGST or UTGST. Same, SGST, UTGST credit cannot be set off against the CGST and SGST. If we need to understand this, we have to remember 7 points regarding this. Same thing, whatever I explained is here. Then cross utilization is also available for CGST can be utilized for IGST and SGST can be for IGST. But CGST credit cannot be utilized for SGST, UTGST and SGST, UTGST credit cannot
the speaker, sir.
Sir?
Yeah, thank you. Okay.
Sir,
I believe your presentation was only for 10 to 12 minutes, but you have spoken for half an hour.
Sorry, sir.
Yeah, I didn't want to disturb because then I may be misunderstood that I'm intruding into your session. Thank you very much.
Sorry, sir. Thank you, sir.
Special appreciation to the student who presented on the ITC. I think it was Hariram who presented on ITC, input tax credit. In fact, I visualize a great future for that student because of his in-depth knowledge that student has, in interest that student has, and the painstakingly the student has prepared the presentation. But the student should also ensure that he keeps up the time. That alone was the factor in deciding one of the factors, I must say. The student, I wish all the students all the best, and my sincere appreciations to each and every one of you